Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have James McDonald, CEO of Hercules Investments, to discuss the launch of the new fund, NFLHX. James, it's finally great to meet you in person for all the virtual content that we've done together. I love it, NFL, the nod to NFL in your ticker symbol, so that was quite clever. Let's talk about Hercules Investments and the style. You actually use behavioral finance in your investment process.
It's absolutely true. My grandmother used to say, people don't change. There's nothing new under the sun. And throughout generations, any decade you look at, fear and greed consistently drive market direction and market volatility. And our systems obviously study technicals and fundamentals, but our expertise is at understanding what the mood of the crowd is to capitalize on monetizing volatility.
So tell us about the fund, NFLHX.
NFLHX is for qualified investors only. It's an aggressive growth fund that seeks to target gains in rising markets and falling markets. Because of this feature, we can be used as a portfolio overlay to protect against downside risk. Our fund is ideally suited for this environment where uncertainty is the dominant theme. We've seen markets run up tremendously, and there is a potential for huge downside. Our fund will tend to outperform on the upside and is positioned to capitalize on a market downturn because it invests in inverse securities, including futures and options.
So what's the strategy behind it? How do you make the decision for what you're going to put in and out of the portfolio? What kind of conditions are you looking for?
So we are focused on the indexes. You know, there's so much idiosyncratic risk with stocks, it's very difficult to predict what a stock will do on any given day. The fund invests in Nasdaq 100, S&P 500, and Russell 2000 index options, and then volatility. Between those three indexes and volatility, we can provide exposure to beta and or alpha on the upside and provide protection in the downside for a long-only portfolio. In this current environment, we also love the feature of the fund and its ability to invest in volatility. It's an often misunderstood asset class. Most people don't know you can own volatility. Well, typically when markets fall in a precipitous fashion, volatility spikes. And because our fund has exposure to indexes on long and short instruments and exposure to volatility, we can provide risk-hedged growth and even provide outsized performance when markets fall.
So how do you manage risk? How actively are you managing this portfolio?
It's a great question. That is the feature of this fund. There are lots of ETFs and inverse investments out there that are passive. And so if markets fall, they will tend to rise. But if markets rise, they will tend to fall. Because our strategy is active, we're seeking gains in rising markets and we're seeking gains in falling markets. We do this because we're actively managed. We're increasing and decreasing exposures to volatility. We may switch from long positions in calls to short positions in puts. And so because of that active management, we tend to outperform with an objective in any market condition. We call it an all-weather strategy.
All right, James, appreciate the insight. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.